Hello and welcome. In this video, we will learn about primary and secondary market. Alright. In the previous video, we learned what an IPO is. IPO or initial public offering is the first time a company issues shares to the public. Right? Now, connected to this is the topic that we will be learning in this video. Alright? And to help you understand, I will take an example. Okay? Now, these are farmers. These farmers grow fruits and vegetables. Alright. After they are done with harvesting the vegetables and fruits, they need to sell them. Correct? They need to sell these fruits and vegetables so that they can earn money, which can be used for the next crop. Right? Now, these farmers do not sell directly to people like you and me. Correct? We do not buy directly from these farmers or the farmers. So, what do the farmers do? They go to middlemen. They sell their produce to middlemen. Now, who are these middlemen? Middleman is a person who has a lot of money and who can buy fruits and vegetables in bulk. Okay? Now, people like you and me, how much can we buy from the farmers, right? We can buy 2 kg, 3 kg or 4 to 5 kgs, that's all. Above 5 kgs, it is of no use to us. But the middlemen, they buy tons or quintals of kgs of vegetables and fruits from the farmers. In the same way, malls or shopping complexes buy fruits and vegetables from the farmers in bulk. Alright? The farmers have grown hundreds of kgs of produce and they need to sell all of them. And the only way to do it is to sell it to middlemen or malls. Okay? And this is called as primary market. Alright? The farmers do not sell to customers like you and me. They sell to someone who has a lot of money and who will buy the produce in large quantities. Alright. Now, what do these malls and middlemen do? The middlemen sell or supply the fruits and vegetables to various shops in various cities. Or maybe middlemen may have their own shops where they sell vegetables. People like you and me want vegetables and also fruits in limited quantities, correct? 1 kg, half kg, 2 kgs, whatever the quantity may be, it is limited. We go to the shops or the malls and buy vegetables in required quantity. Correct? So the farmers sell their produce to these big players or those who have a large amount of money and who can buy in large quantities, and we go and buy from them meaning the shops to which these sell to, right? So this is the secondary market. Okay, this is the secondary market. Now let us apply the same concept that I explained just now to the stock market. Okay, we'll see that now. Now these two are the friends from our example, right? What did they do? They split their company into many shares and then they decided to sell some part of the shares to the public. Correct? They went for an IPO and carried out the process. Correct? This is what we had learnt in the previous few videos. Right? Now, to raise a large amount of money quickly, these friends need to sell their shares or the shares of the company to all types of investors. So, through the IPO, they decide to divide the shares and offer them to different groups at the same time. A large portion of the shares is offered to the big players. Who are big players? The HNIs and financial institutions. HNI, high net worth individual. Okay, high net worth individuals. These are the ones who have a lot of money and those who can buy shares in bulk. All right. So financial institutions and HNIs can buy shares in bulk. This is crucial for the company to secure a large amount of capital upfront. At the same time, a separate portion is offered directly to retail investors, meaning people like you and me. And this entire process, where the company creates and sells its new shares to all these groups for the first time, is called as the primary market. Okay. So what happens after the IPO is over and the new shares have been distributed to everyone? What happens then? That is when the secondary market begins. The secondary market is the stock exchange like BSE or NSE, where all the investors, institutions and the retail investors alike can freely buy and sell those shares from each other. Okay, and this is the secondary market. So a primary market is when or where new securities are created and sold by the company to the public for the very first time. That is the primary market. A secondary market is where those existing securities are traded among investors. So basically, when people like you and me say that we are investing in the stock market, we are usually talking about the secondary market unless we have applied for and received shares directly in an IPO. Okay. When we buy a stock, we are not buying it directly from the company itself. We are buying it from another investor through the stock exchange. And this is secondary market. All right. Now, I had given you the example of the primary market, right? Farmers sell their produce to middlemen and malls. There is a government entity that makes sure that these middlemen and malls do not cheat the farmers. All right? Or that these farmers do not cheat the malls and the middlemen too. Okay? Now, in our case, in the case of stock market, the promoters and the investors should not be cheated. Correct? The promoters should not cheat the investors in any way. The investors also should not cheat the promoters in any way. Correct? And to regulate this and to make sure that no one is cheated, we have government entities. And SEBI, the Securities and Exchange Board of India, is the government entity in India that does this task. So SEBI's role is to make sure that everything goes smoothly and no one is cheated. All right? Yes. So I hope you have understood the concept of primary and secondary market.